On Power Talk today, we continue our conversation with the CEO of Mwalimu Sacco, that's Kenneth Odhiambo, who continues to speak about the 49 years of the Sacco and on the verge of celebrating their 50th. Thank you for continuing to stay with us on the show. When we broke off in the first part of this conversation, you talked about the sustainability agenda. Maybe you could go into a little bit of that now for Mwalimu Sacco.
Right. I think it's one of the key preoccupations that we currently looking at, both at stewardship level and within our staffing ranks. And this agenda is all about the existence of Mwalimu National many years to come. And many years to come here, what I mean is that in terms of the kind of clientele, its membership, in terms of the product and services that it offers that will be more relevant and convenient to our clientele, in terms of the future generation. How would they be able to be integrated into Mwalimu National? And of course, looking at that brand in terms of Mwalimu National, how do we infuse the right culture to sustain the brand? And I think that is the most critical thing that also we have looked at. We went through the motion of, the culture and brand image, re-engineering, of course, culminating into a number of initiatives that, of course, the board, both the board and the staff are now running with it. So we're looking at an institution that we want to see for future. And of course, beyond the time that we live in this world, for some of us, as I can state. So that is the way we look at it. And the beauty of it is that this year we have embarked on a review of a corporate strategy with an eye of seeing what is it that we need to do as Mwalimu National to be more sustainable, for the brand to be more, resilient, and of course to be more appealing to our would-be clients and the current clients that we have. The last thing probably I want to mention here is that our current existing membership and of course clients, how do we make them feel part of the institution even after they have left their active teaching profession? And one of the things that we're looking at now is retention. And how do we retain them? Because at that point in time, they will not have any active income in terms of salaries. Probably they'll have pensions, which will not be enough. What are some of the products and services that we can be able to put for them on the table so that they remain with us? And of course, we retain those resources for purposes of the advancing the financial inclusion agenda within our total membership. Yeah. That is what we are looking at. And of course, moving on to that, we have also now seen our retired, or senior, you call them senior members, you don't call them retired yes. For obvious reasons. Yeah. We have crafted a product for them called the Golden Products, which of course ensure that as they remain with the Sacco, we try to stagger their savings so that they can be able to have some level of income to sustain them besides the pension. Yeah. But of course we have also incorporated a post-retirement medical cover, which of course immediately the employer get done with them, they probably will not be able to access some of these best facilities that we see around.
In January this year, you launched an affordable housing mortgage product. I remember we covered that story, and you had the Cabinet Secretary also attend that launch. Perhaps you could speak to us about this product and what offering it has for customers and why people should take affordable mortgages with you and not with any other institution for that matter.
Right. This is one of the initiatives in collaboration with the Kenya Mortgage Financing Company, which of course is a government institution, embedded at the National Treasury. And one of the things that makes this very attractive is that the mortgage lending is at a single digit. Actually, we are talking of 9%, irrespective of what is happening in the current interest regime. That is already tagged. So what we are looking at is that there are members who actually have saved with us quite some substantial amount of money, And of course, they're looking at more, credits that can enable them to own properties around Kenya. And of course, some of them who are coming, young members also looking at how can they be able to put up residential, houses, or rather buy some of the residential houses. So we partner with the Kenya Mortgage Refinancing Company. And what we do is that this segment of membership are able to access this facility, put up housing in any, town within Kenya. And of course, we are able to refinance them, and then Kenya Mortgage Refinancing refinances whatever we give out. So in terms of cash flow, we're really not losing. We still have our money to be able to lend to other segments of our products and offering. And I can tell you for free, this is one of the products that is going to move us to the next level in terms of how attractive we become. And I want to report that even as we sit here, we are from all this year, we are at almost over 30 million. Of course, teachers, knowing that they have not been able to get some salary adjustments, but there are quite a number of them that have come forward, and of course, the patronage is expanding. It is one of the things that, one of our products that we will see how to rejig to be able to be more accommodative and be more responsive. And actually, many of our members are asking, how can we be able to be integrated in this kind of product? So it's one of the partnerships that we want to move forward with, and we're looking forward in terms of that.
Okay, let's talk about diversification now of some of your products and the work that you do. So you acquired Aspire Bank in 2014, and then this year, I think the sort of transaction talks on the acquisition by Equity Bank of all the assets and liabilities of Aspire Bank started around last year, but was now concluded this year. This was a unique transaction. Talk to us about this and what other institutions can learn, from such a venture going forward. Right.
Without running the risk of going back to the history, because I think that really would not help the situation as is now. The issue of Aspire Bank, I think, is let me state authoritatively that is behind us. Is one of those investments, yes, that we went into. We looked at the blueprint in terms of the conceptualization of the project. It was pretty good. But along the way, I think things did not work. But as a business, at times you have to assess your position and see if things are not working, how agile are you in terms of trying to rediscover what probably will work for you. I know it took a lot of time, but again, I think we made that decision. And it was a bold one, that we can't keep kicking the can down the road. We have to make that decision so that we are able to seal the loophole in terms of the whole of trying to get the Aspire Bank, operating. And that's happened in the sense that working with the financial sector regulators at the Central Bank and SASRA, we were able to craft that transaction with Equity Bank, and of course moving the assets and liabilities, certain assets and liabilities.
Yes.
And I must be very clear on that, certain assets and liabilities in the sense that the loans and the deposits, you look at where does the risk lies most, because the depositors are the ones who probably will make a lot of noise, and that in itself has a potential of rattling the whole financial service sector, including even the SACCOs themselves. Remember, I did mention that as in financial service sector, we sell trust. The moment that there is an element of doubt, that would have a ripple over effect in terms of what we're doing. So coming back to the final details of it, we transferred the asset and liabilities, the deposits to Aspire Bank, right, to Equity Bank.
Yes.
Now what is remaining here is the Aspire Bank, which of course doesn't do business, but what do we do with it? We have to wind it up. And how do you wind it up? So the members did make the decision in terms of how we move. And as I speak now, we already have a plan in terms of winding it up. We actually had our delegates meeting last week. We did update them in terms of the journey that we have walked and what is pending before us. And of course, we have also had engagement with our regulators, the CBK and SASRA. They also had working us in terms of how to resolve this matter. But it's one of those unique transactions. It was not a commercial transaction per se. Okay. And I think that was some of the questions that people kept on asking. This was not a commercial transaction. This was a resolution transaction, so that we also protect the financial services sector from that ripple effect of loss of confidence.
Okay. I want us to now, look forward for Mwalimu National Sacco. You've already told us about some of the products that you have outside of those salaried individuals, the senior citizens, as you call them. So what does the future have in terms of the offerings that you have to other people? Are you planning to open up Mwalimu National Sacco to, away from teachers? Can anybody join the Mwalimu National Sacco? What does the future look like?
Right. I think, Yvonne, you put it in the right perspective. Actually, you asking that question at the time that I have an answer. Because I think it's only 4 days since that decision was made. And we did look at the institution. And, of course, I'll go back to the sustainability of the institution. If you look around, many SACCOs have moved out of their nets in terms of their captive areas of where they used to draw their membership. Most of the SACCOs initially were employer-based. But, of course, as time evolved and, of course, the economic parameters also changed, they have opened up the common one, and they have really grown up very well. Of course, issues of the risk management aside, they've been able to amass deposits, and they'll be able to raise quite substantial amount of funds to lend. And, of course, that has also shielded them from what you call external borrowing. So for us as Mwalimu National, we sat back and looked, because it's something that we've been trying to bring to our members over time. It has not been very appealing to them, but we told them, look here, if we don't go this direction, then even the government subventions that we are more comfortable, receiving, we probably cannot predict with certainty that it will come in time. So we need to relook at this matter and see how best can we be able to remodel it so that we address the issue of risk. That was actually their main key concern. And also so now the sustainability of the institution in terms of having enough funds so that we also don't go to the external borrowing. So as we speak now, Mwalimu National is open to salaried employees, and of course the quasi-banking side of it, which is FOSA, as mentioned, is also open to what you call natural persons per se. Natural persons here, I mean people like me and you, but not companies, because of the other underlying issues that we also need to relook in the context of matters tax in this country. So that is basically the position now. So as I speak,
Mwalimu National Sacco is now open to...
So even right now, before I leave here, probably you'll have to... If you want to give me a form, my colleague will be able to give you a form. I onboard you tomorrow. Then we get on a journey.
There's many in this studio.
Right, I can see.
So it's not just
I have potential clients around here.
You do, okay. So opening it up to salaried, senior citizens. You've talked about the youth as well. I want us to close our discussion by talking about, the saving culture, which SACCOs have played a major role in, and, having that sort of repository of where people can put their money, have that earn interest and, shares, and of course, borrow back off of the shares that they have. What's the role going forward? I know you've talked about young people having different needs, and they're now the majority of the population. Let's just wind up by closing on the role that SACCOs continue to play and how they can evolve, even as we continue to encourage a saving culture in the country.
Right. I think, as I mentioned before, SACCOs are basically modeled around savings than of credit. And of course, as we move on, there are quite a lot of initiatives that are happening around this whole model, and not the traditional aspect of the back office whereby people used to save and probably just get loans. But I mentioned the aspect of the quasi-banking. SACCOs are now able to mobilize savings, just like banks do, from within their membership realm, in terms of how they have defined that within the bylaw. And of course, that has really given them some element of resilience in terms of the funds that they've been able to accumulate. And of course, in terms of liquidity, they have also been able to get enough liquidity to support their operations in terms of financial access and any other needs. So moving to the youth, I think is one of the areas that I had mentioned that SACCOs need to relook at very, very, very seriously. In terms of leadership, the issue of inclusivity. I mean, I can tell you within Mwalimu National, even our membership, I can see some of those young teachers that we have. And you see the kind of interest that they have. We cannot afford to leave them out of this. And even in our leadership team, I probably looked at the age spectrum of our delegates that came to this year's meeting. I mean, they are fairly young people, and I am liking it because they are the center of it. Because when you keep them out, they are also very, what you call the keyboard warriors. You have a meeting here, they Photoshop the reports, they send them on the walls, then we tell them, can you come in so that now you're part of this decision? So that you also, I mean, give that element of comfort to other membership that you can also lead. And they are taking up the challenge, but of course there's only one thing that we told them. There must be commitment. One commitment that we are saying is that you must also have your savings there. You cannot make a lot of noise on savings that probably you don't have. So you must show that commitment. And they are doing it actually, and I'm liking that. So one of the things I said, one day, one time, if I happen to leave, then we would have left some people to carry on. You know, you're leaving it in good hands. That's a good place to leave our conversation. Thank you so much for joining us on Power Talk. That is the CEO of Mwalimu National Sacco, Kenneth Odhiambo, on Power Talk this evening. Thank you once again. Thank you. And you give me the membership.